Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES pulled back to 80.75 where responsive buyers were active. And at this point, heading into the open, the market is again in a very balanced state and our short-term directional bias is neutral. The main question we're trying to answer at this point is whether yesterday's breakout attempt and a move to a marginal new all-time high is now signaling a little more bullishness in the market and whether that buying is going to continue. Now, watching the Russell recently has been pretty valuable. And in the overnight session, we knew that there was support at 1242 to 1243 in the Russell, which is its breakout area, and the overnight low in the Russell, and there being 1244. So 1242 to 1244 is now going to act as important short-term support in that market, and how TF responds to 42 to 44 will actually help us establish bias in the S&P. Bigger picture, we know that buyers are still dominant. We are still in an overall bullish environment, but short term, we're trying to determine whether yesterday's break to a marginal new all-time high is now going to result in any kind of follow-through. By default, we are going to give the benefit of the doubt to buyers as long as we aren't seeing any major signs of weakness on the day time frame. Heading into the open, we have the aggressive area of support at 2184 to 85 quarter, and just again keep in mind that this is the aggressive spot, and holding above it signals bullishness in the market. But as far as initiating a trade at 84 to 85 quarter goes, we do have to see some underlying strength in real time in order to use that as an entry, because it is a fairly aggressive price to get in. But if the market is quite strong, then there is potential that 84 to 85 quarter can hold. Below that, we have initial support at 79.5 to 81.5 with the gap, naked VPOC, and the overnight low all bunched up within that support zone. And as long as we aren't seeing any major broad market weakness or a failure in the Russell at 1242 to 1244, the 79.5 to 81.5 area still has a potential to attract responsive buyers. And then below that, we have the key high volume node of the recent balance at 77.5, followed by the support at 72.5 to 75. Now, given that we are still running in a very low volatility and low volume environment, even if there is some weakness on the day time frame, the market could be short-term exhausted by the time it gets down into 72.5 to 75, especially the bottom part of that zone. So that's still an area where responsive buyers can be active, and in the event of a move below that, 65.5 to 67.5 would mark a range extreme. On the upside, we have resistance at 89.5 to 91.5, which marks the push to the marginal new all-time high yesterday, and then beyond that, 94 to 96 is an area where the market would be exhausting the range. Now, looking at the Russell, the other zone to keep in mind on the upside is 51.5 to 53.5. So 1251.5 to 1253.5 is a important resistance zone in TF. And first time back up there, that's still an area where sellers can be active. And if that coincides with ES testing 91.5 or perhaps 94 to 96, then that would just further strengthen the idea of resistance up there in the S&P. So right now, going into the open, again, our short-term bias is very neutral because we're just trying to determine whether yesterday's breakout attempt is now going to stick. And if it is going to stick, then we are going to have to see underlying strength, a positive and upward trending advanced decline line, and the NYSE tick spending more time above zero. So absent some decent buying, we can just continue balancing within yesterday's range. And on the other hand, if we are seeing not just a lack of strength, but outright weakness with a very weak advanced decline and the tick holding below zero, then it would bring up the scenario of a failed breakout attempt. And then we need to be more cautious on the long side. And if we are going to take longs, then we want to allow the market to get short-term exhausted into a good zone. And at the same time, if Russell is also testing a good area of support, that would increase the odds of buyers stepping in and at least getting some level of rotation off that zone. So that is really how the markets are set up at this point, heading into the open. Short-term neutral, but absent any heavy selling, we know that this is still a very balanced market, and at the key zones, buyers can still technically step back in. How the market responds to 79.5 to 81.5 in the S&P is really going to help us with determining the directional bias, because a break below that area would just confirm the failed breakout scenario. So ideally you want to see it holding 79.5 to 81.5. So those are the main ideas heading into the open. Let's see if the buy side can maintain the recent control, and we'll take it from there.